The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the March 5th, the wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary one. Now, the easiest way to do that, well, it's to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We're going to go figure out what those bulls and bears, what those buyers and sellers are doing. Of course, what I would love to do is hear from you. So the easiest way to do that, if you have a request, is to send me an email. Send that to steve@tfnn.com. Inside that subject heading, please put radio show question. Of course, if you're inside our Tigers Den, well, then any and every ping will do. So let's go ahead. Let's get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Well, we're beginning our day here with a mixed bag. Mix goes like this. The Dow is trading up 52 points. S&P is off 5. NASDAQ 100 down 33. Russell's up 80 cents. Trendy's down 10. Semi's up 5. New York Stock Exchange New York Stock Exchange up 103 points. Gold is trading up by $10. Silver's up 56 cents. Light sweet crude back 266. Nearly a 4% move to the downside. Natural gas is up a penny. Copper is taken off. It's up 24 cents. That's a 5% move to the upside there. If we take a look at that D-TD9 column, the very right-hand column, you're going to see a bunch of stars out there. Those stars are telling us about TD9 count bottom patterns that either have formed or are forming out there. So there's a lot to take a look at. You've got here, they got the cash indices. Just ignore the profile levels that pop up. So you'll see that we're really in line both with the S&P 500 cash index as well as the ES Mini. Now, in the case of the ES Mini, they're both in bar number. They both formed bar number 8 yesterday. That just simply means they have to close below bar number 5 today in order to confirm a TD9 count pattern out there. So you've got TD9 counts inside the S&P, the NASDAQ. Now, the Russell completed its TD9 count, or is going to complete its TD9 count pattern today. So whatever the low of the pattern is, looks like at this stage here, it's yesterday's low. That's your key level of resistance. Now, if we get to a newer low today, it's still valid TD9 count bottom pattern. That should take price up towards its oscillator and change line. If you look inside the sectors inside of the S&P 500 as an example, we've got the consumer discretionary sector, the XLY. The XLY is completing a TD9 count bottom pattern today. Should rally up towards the 212.90, the 215.21 area. The weekly time frame chart for the XLY is basically testing profile support. So it looks like we should get that counter trend move. The monthly chart is basically testing its oscillator and change line. So we ought to see a little rally inside the XLY. Inside the healthcare sector, this might be a misleading signal. Let me just throw it up here. Just in case. You've got a Rhodes Momentum Indicator top, so that much we know with price just simply consolidating with inside its profile. It did form a TD9 count top yesterday as well. The XLRE, let's see what we have here. I believe we've got a well, I'm not going to believe. I'm just going to wait for the chart to show up. We've got a TD9 count top with price trading with inside its profile. That's between the range of 42.39 and 43.49 out there. The technology sector, the XLK, which we'll take a look at in just a bit with Mr. Bill. Take a look at the longer term. But you'll see the TD9 count pattern that's going to form today unless price were to close above the close of bar number 5. That close is 222.59. And the XLK on a weekly basis, price is above profile, or it's just consolidating with insiders profiles. But here we should see price rally up towards the 226 level out there. The XLC has got a TD9 count bottom that formed yesterday. It'll be completing that pattern today. That should take price up towards resistance, which at this stage looks like right now it's at 100.57. That is the bottom of its daily profile. Now, it closed today below 100.57. Since we closed below it yesterday, says that in the XLC, a counter trend move would find resistance at 101.52, or between 100.57 and 101.52. So if you were to see a close above 101.52, that ought to get us to its oscillator and change line, 102.48, and above that, back towards the 104.83 level out there. So you can see with inside the sectors inside the S&P 500, you've got a number of TD9 count bottom patterns. Same thing, obviously, with the SPY, the Q, the IWM. Now, in the case of the SPY out here for the S&P 500, the RSP, if we take a look at it, it does not have it. Now, it doesn't show up on my screen. You might say, well, just how did you know that, Stevie? I knew that because I looked at it earlier this morning. And that was looking for Doble-Guy confirmation. Well, the only thing confirmation that we have here with the RSP is price getting back to its breakout level of support, 147.70. 174.70. The reason why the equal weighted ETFs are really important is they typically paint the real picture, the real true picture. So whereas we've got the SPY, the ES Mini, the S&P 500 cash indice with their TD9 count patterns that are likely going to confirm today, we don't have that pattern inside the RSP. Does that concern Stevie? It would only concern me if we close below 174.70, and even then it would depend upon the type of volume as it goes into the swing point from January 13th, which has volume of 8.1 million shares. We came down yesterday with 10 million shares, so they were moving down with volume. Today so far, in just under 2 hours of trading, 2 million shares, so that's about a 6-7 million share a day, going into 8 million shares. So we're starting to light up in the loafers just a bit with regard to the equal weighted ETF. We might as well take a look at QQEW as long as I'm putting up the equal weights out here. Let's go see what message it is giving us. We know that the Qs have a TD9 count bottom signal. We know that the NASDAQ 100 has a TD9 count bottom signal. We know that the NQ does as well. Well, turns out inside the QQEW, you're going to go ahead and confirm a TD9 count bottom pattern today, complete that pattern tomorrow. So unlike the equal weight for the S&P 500, the RSP out here we've got really true synergy. So the NDX 100 has given us a signal that by tomorrow, we ought to have a bottom and we ought to see a rally. That rally ought to last, I would say, until price were to get up towards its oscillator and change line. That current print is about 130.06 out there. What else do I have on this set of charts? You see NVIDIA has got a TD9 count bottom pattern. Microsoft, since nobody asked about Microsoft, let me put that chart up on our screen out here. We're going to take a look at NVIDIA. We start going through the individual stocks, which we'll do during that next segment out here. You can see in the case of Microsoft, as long as price closes the day below 392.53, you will get a TD9 count bottom pattern. There's a new profile that is formed. Support is at 383.84. Resistance up at the 403.70 mark out there. 30-minute top has got a TD9 count top. So that's suggesting that you should see Microsoft pull back towards the 388.37 level, maybe even between 384.27 and 385.89. That could be setting up a entry point to the extent that you wanted to play at least some type of bounce inside of Microsoft. Steve Rhodes with TFNN. We get back from this break, we're going to start taking a look at the requests that have come in. NVIDIA for Tom G, SCO, which means we'll take a look at Lightspeed Crude, PayPal, AI, APA, XLK, Amazon, Avgo, Nugget, which means we'll look at the GDX and the US dollar. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. So I'm going to try something a little bit different today, as opposed to having a number of different screens open, where I've got where I've set up ahead of time all of the requests. we're going to primarily try to do with this screen here, this primary screen. We've got a daily, weekly, monthly, and also now a 30-minute chart that we can take a look at. Just see if this flows any better. And if it doesn't, then we'll just simply go back to what I was doing the last several weeks out here. So I'm going to start with that first request coming in from Tom G, who's looking at NVIDIA, and his question is, can it get to $124? And the answer to that question is yes. Why would we say yes? Well, number one, as long as price closes below this amount today, Tom, and the amount is the close of bar number 5, which was the close of February 27th, and that number is 120.15. As long as price closes below that, you'll get a TD9 count bottom pattern. Price is trading inside a bullish structured profile, so the buy zone is between 112.96 and 115.81. So we're inside that buy zone right now. The rally should take us toward the oscillator and change line. Now that's at 123.09. So you said 124. What I will commit to you, to the extent that I can, is that price should make it to the oscillator and change line. Now, it's a bullish structured profile. And typically, when price closes above the center of a bullish structured profile, which it would likely have to do to get to 123.09 or so, that usually buyers have the strength to get up to the top of the profile. And that's at that 135.74 level out there. I don't see anything on the monthly time frame to prohibit that from taking place. The weekly time frame has found support, at least it appears to have found support at its breakout level at 114.86. So NVIDIA should be a go to the upside. 123 and above that 135, so that would get you to your 124. You also wanted to take a look at the SCO, which is really being short light sweet crude. So what I'm going to do is I'm going to put up light sweet crude instead. Because you're just looking for signals whether you should stay in the trade. And I'll show the SCO chart, and we'll see if it's got a similar pattern. But if you heard during the opening, whether it was whether it was the 11 a.m. update or in that first segment, we did identify a TD9 count bottom pattern that is going to go ahead and form today inside of Lights Recruit, and we'll complete that pattern tomorrow. So that is then suggesting, with regard to SCO, that should be, because that's being short Lights Recruit, that should be the extent of the downside. You should get a rally. That rally should take us up towards resistance, which right now is the bottom of the daily profile, which is at 68.84. The weekly time frame, price is pulling back into a support level that happens to be a Three River Morningstar candle formation that had formed out here. That's between the week of September 6th through September 20th. That level of support is really down at the 63.61 area. Monthly time frame chart, price is getting back to the bottom of its profile. That's at 65.09. So all this is supporting the idea that the TD9 count bottom pattern for the daily time frame, which will complete tomorrow, should hold, and we should see some type of a rally out there. Now, you asked specifically about SCO. Let's go see if it's got those same daily TD9 count signals. Now, again, that would suggest that SCO would form a TD9 count top today, right? This is, we're looking at being short. Yes, you're in bar number 9 to the upside. But you've really got to, trade this off of light sweet crude out there. So that's what I see, Tom. And so you might want to lighten up the load, or at least watch for a intraday signal, the 30 or 15-minute time frame. Maybe what you're starting to see with SCO is continued lower highs and continued lower lows out there for a short-term time frame. So I hope that helps you out. SatP wants to take a look at PayPal. PYPL is a ticker symbol. So let's get that fired up here, and we'll take a quick peek at that. So far, so good. With having less open, my charts are populating much quicker. We can see on that daily time frame for PayPal that today we'll go ahead and confirm a TD9 count bottom pattern. You'd have to see one heck of a rally to negate that signal. Now, what price should do is rally up towards the oscillator and change line, which is at 70.66 out there. That may be the extent of the rally, because on a weekly time frame, we're not seeing any kind of a bottom signal out here. The monthly time frame suggests that price might be pulling back to test its oscillator and change line. That is at the price level of about 63.20 out there. So in the case of PayPal, and you were looking for support levels out here. So your support level, since we're other than the monthly support level that I gave you, you're below profile support on the daily, below its oscillator and change line, you really have resistance areas. The weekly support area, by the way, would be 56.97 out there. So your support level is going to come from the low of the daily TD9 count pattern. That's going to confirm today and complete tomorrow. So that's your support with regard to PayPal. You also wanted the same information on AI. So let's get that ticker symbol up on our screen out here. See what we have here for AI, which is trading out at 21.96 and is trading right into a new profile that formed today. Now, so that's resistance, unless price is able to get above it. So let me give you the profile area. The profile ranges from 22.43 at support, 23.88 is the center, and 27.52 is the top of that profile. So right now, there's no bottom signal here, and price is below that profile level of support. The only hope at this stage here really comes from the weekly time frame chart. The weekly time frame chart, price is testing this breakout level of 22.42. Granted, we're trading below it right now, but it's only Wednesday at 11:24. It really depends on what the close is on Friday. So price is back at a potential support level on the weekly time frame, and the monthly time frame too. The bottom of its monthly profile is 21.47. We've been down to a low this month of 20.97. We've been down to 20.97, so we've tested and rejected that area of support. So we've got support on the longer-term chart, the monthly time frame chart. It's the only piece of support that I've got for you, and you've got that resistance that is up ahead. But it looks like this actually wants some lower price out there. So I hope that helps you out, Sat, both with AI and PayPal. Brent in Martinez, California, wants to take a look at APA, and he's looking for bottoming signals out here. So let's go see what's going on in the daily time frame. Man, Stevie's just zipping right through these when we do it this way. What took me so long to figure this out? I won't answer that question. But if we take a look at the daily time frame, Brent is right on, and that's a TD9 count bottom that's going to confirm today, and it's going to complete tomorrow. Now, let's start looking at those other charts out here. The weekly chart looks basically absolutely horrible. Let me open this up, Brent, see if we're going up against anything. Well, if we are, it's a long time ago. We are trading all the way back into the 2000 August TD9 count. We're trading into a TD9 count bottom from August of 2021. Yeah, that's how far back we are. Now, the volume on that swing point is 41 million shares. Last week, we moved lower with 80 million shares. This week so far, 27 million shares. We're about halfway through. So let's say we're at about a 50 million share clip as we move into that swing point from August 20th of 2021 out there. That's got 41 million shares. The high is 1753, and we're at 1777 out there. So this suggests caution. The 30-minute time frame chart does not have a bottom signal. In fact, it negated a TD9 count bottom pattern. So is today the bottom for APA for the TD9 counts? Stevie's going to have to say no. We don't see it right now, certainly on a weekly time frame chart, but we don't see it on that intraday chart as well. But Brent, is there a bottoming signal? Absolutely. It's just a little bit concerning with regard to the weekly and even the monthly, which is trading below its breakout level of support at 1852. Steve Rhodes with TFNN. We'll be right back.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are March 14th and 28th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. So give me a second here. I decided to take the risk and see if I can get my e-signal system open at the same time that I'm using this minimized version here of my NinjaTrader charts. The only thing I didn't anticipate was during that break that it wasn't enough time to open up the e-signal application. So we're just a little bit of patience here. Just give me a moment, and we should be ready to go here. So now what I'm going to really test out is see if this is if it's still efficient with regard to the timing of putting up these symbols. So we're taking a look at the XLK. Next, okay, Mr. Bill wants wants to understand the longer term picture here. So let's take a look at the XLK for the monthly time frame chart out there. And here what we can see, Mr. Bill, is that price is consolidating with inside its monthly profile. And so the support level is down at 211.71. Resistance is up at 243.14. The center of the profile is pretty close to the center. So so 211.71 is the level of support. A bearish engulfing candle last month was a doji candle. That was really a signal that the market was tired. It still has a valid TD9 count and Rhodes momentum indicator top. Sorry for the hiccups out here. So you just got a consolidation on a monthly time frame. Mr. Bill, this looks like this could be the fourth month to the downside out there. So with regard to the XLK on a monthly time frame, it should be signaling to us, if this is still in a bullish market, that this should be the extent of its move to the downside. Whether 211.71 holds or not, that I don't know. But we are 4 consecutive months to the downside in bull markets. That typically is a really decent retracement out there. Quite frankly, inside the XLK, it's been pretty insignificant. So it's held up really well. If you look at the weekly time frame chart, the weekly time frame chart has a Rhodes momentum indicator top as well. And this is trading with inside its bullish structured profile. So here, the level of support or the buy zone from a weekly standpoint for the XLK is between 195.49 and 209.71, with 203.01 being its TD9 count breakout level. So that should really be the real key level of support. Now, will price get down to that area? For that, we look to the daily time frame chart. And if it's going to do that, it's not going to do that likely today or tomorrow, because what it's prepping for is a TD9 count bottom pattern. Today is going to become bar number 9. This pattern will be completed tomorrow. And the XLK ought to rally up towards the oscillator and change line, and that's at the 226.20-ish level out there. If you look at the 30-minute time frame, it's already established a TD9 count bottom, had a nice little rally, and now it's pulled back. And as long as that remains in effect out there, the bottom may have already been in, and that bottom may have been yesterday. In the case of the XLK on a 30-minute basis, the bar that formed that bottom had volume of 470,000 shares. The last 30-minute bar, we did 253,000. This bar right now, we're at 1134. We've got, so we're just really started. So I think the volume at that stage doesn't matter. But the volume perspective that you're looking at, 470,000 last bar, you were coming back with some lighter volume out there. So that's the XLK, the bigger view, the smaller view, and every kind of view that we could come up with. Hope that helps you out. Duncan wants to take a look at Amazon. Now we're going to see just how fast these charts replenish themselves out here. Oops. Now, and of course, what does Stevie do? Fat finger screw up. AMZN. So let's do it, make it a little bit easier. You got to type it in correct. If time, can you chart ARWR? Of course, yeah. We're going to make the time. So not too bad. Not as fast, though. I can see that, but still not too bad. So we take a look at Amazon. Amazon does not have a daily bottoming pattern. What Amazon has is a brand new profile that has formed or is forming, and that's forming today. So Amazon has supported 201.94, Duncan, and resistance or a sell zone between 213.21 and 215.46. If you look at the weekly chart for Amazon, prices below profile support, suggesting that it wants to go target 185.23. On the monthly time frame, price price right now testing a key level of support, and that is its oscillator and change line right around where we're printing. You did get a TD9 count bottom pattern on the 30-minute time frame. Right now, it's just trading with inside profile levels 201.65 to 206.23. The key level here for Amazon, even though it doesn't have a bottom pattern, I'm not saying that it won't bounce or rally, or along with the NASDAQ, the S&P, the Russell, because they're TD9 count bottom patterns. So here what I would say is that Amazon probably should rally up into that sell zone, 213 to 215 zone out there. The way that you'd know that is if Amazon is able to close above 200. Geez, I can't read my own script out here. It's at it at 209.23. 209.23. Close about 209.23, and Amazon should head higher. Dunk, you also wanted to look at Avgo, Broadcom out here. Let's go take a look at it. Let's get its charts here fired up. And nothing for me to say. So this negated a TD9 count bottom pattern 2 days ago. So like Amazon, Avgo is also forming a new profile. And it's a bullish structured profile. This buy zone is between 184.38 and 196.08. Oscillator and change line resistance 204.82. Profile resistance 215.58. That's coming from the daily time frame. When we look at the weekly time frame chart, this suggests that it wants lower price. It's got a Rhodes Momentum Indicator top. Looks like this would be week number 2 below profile support out there, but if it's going to move lower, it needs to close below the top of the monthly profile. And the top of the monthly profile is at 186.42. We're at 187.36. So we're at a potential level of support on that monthly basis, but the day and you've got that daily profile support level, but I don't have any kind of a bottom pattern with regard to Avgo. So just to support and resistance to be able to share and provide for you, you do have a 30-minute TD9 count Rhodes Momentum Indicator bottom. If Avgo were to close above 195.28, that would tell you that you've got a further rally. That's your 196.08, followed by 204.90 or so. So, Dunk, I hope that gave the information that you were looking for. JT in New York City wants to take a look at the Nugget. He's looking for an entry, and he's asking where's the buy. Well, what I want to do before we really take a look at a triple ETF out here, JT, is look at the single ETF. That's going to give us the better set of information. So we're going to look at the GDX. I will put Nugget up on the screen for you. In the case of the GDX, the question is, and it's got a TD9 count bottom on the daily time frame, and price right now is rallied right up into potential resistance, the top of its profile, and it's a slightly bullish, bearish structured profile with a sell zone between 40.58 and 41.37. We are trading at 41.37. I would be hard pressed to tell you that now is the time to buy when price is trading into resistance out there. So where would be the buy on the GDX with a TD9 count pattern? I would say it would be a pullback to the bottom of his profile at 39.38. But we'll take a look at the GDX, the good, the bad, the ugly. Of course, we'll take a look at Nugget. We're going to look at the U.S. dollar for no spin. That was one of the reasons that I tried to get my e-signals charts fired up. So we got that successfully done. Look for Berkshire Hathaway, CrowdStrike, CLSK, the TLT in the 30-year, Okta for White Shark, UUU for Chris B, and TNGX for I. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. So we're taking a look at the GDX, so we're trying to answer a question for, and we're going to look at the Nugget as well. We're going to try to answer the question for JT. Where is the buy on this? Now, if price is able to close above the top of its profile, 41.37, exactly where we're trading right now, we ought to see a move up to the 42.57 level. But again, a pullback, the entry area, I would have to say, would be if price were to pull back towards 39.38 and do it with less than, less than volume of 15 million shares. That could be your entry point. What you'd really also like to see would be some type of intraday bottoming signal. Now, we don't have an intraday topping signal. We're in bar number 5 right now, but we can see just how much strength those sellers have at that 41.37 level, because the 30-minute chart is saying rally ho. It should continue to move on. In the monthly chart, we're trading about profile resistance, and in the weekly, we're trading about profile resistance and a oscillator change line. So all those signals are saying that the GDX should move higher out there, but will it? Your entry point at this stage here, I really don't have one for you. Let's put up the charts here for NUGT, see if they happen to be also trading into the top of its profile. No idea whether it is or it isn't, but it's really the GDX, JT, that's best to make the decisions from to trade the Nugget out there. When we take a look at Nugget, it's got a little bit to go to get to the top of its profile resistance level. That's up at the price point of, just to give this to you, well, you're not really in the trade, 51.23. That's its level of resistance. If price were able to close above it, that would be signaling to move up to the 54.20 level. So I hope that helps you out. By the way, the buy here would be at about 46.28. Again, the bottom of that daily profile. No Spin writes in, and No Spin wants to take a look at the dollar. So in order to take a look at the dollar, this hopefully I don't screw this up too much. And that is we're going to change screens. That's a screw up here. And I did it yesterday. And but in order to really show you what's really going on, we're going to switch over. And this might really help with regard to the GDX and gold too. But we're going to take a look at the euro. We'll come back and we'll take a look at the dollar. But what I want to do is take a look at the euro. You may recall I've shown this chart periodically in the past, and what I've notated on this chart are the key things. Well, first, the TD9 count top that identified the major top back in July of 2008. You can see in the U.S. dollar index, the euro has been trading lower ever since then. What I've also marked out here, though, and this is a monthly time frame chart that we're looking at, is I've identified the different Russia-Ukraine issues out there, just to understand what type of impact it's having on the euro. You've heard me share with you and state before that currency likes to avoid anywhere with boots on the ground with regard to war. Why? Because it knows that the currency ends up getting devalued, so many different things throughout history. In any event, you can see where the Russia invaded Crimea back in 2024. That high never even come close to that high. Then the next key event out here was when Russia invaded Ukraine almost 3 years ago, and we can see that price rallied into that resistance level. By the way, as far as where that's at, as far as the number, it's right around the I'd have to open it right around 112 level. But here, what I also did, remember when Ukraine fired that missile into Russia out there? To me, that was another significant element. Well, what's transpired last night? What took place last night? This was during the State of the Union. I think it's called the State of the Union address that was done last night. I was watching the euro, knowing that it had rallied up towards that resistance level, and it's extended itself. Closing above this level here, this is why it's so important, no spin, understand the euro, is because of its 58% weighting inside the U.S. dollar index. What this is telling me, I could be totally misinterpreting it, but what this is telling me is that what the euro is expecting, and traders of the euro, is that the Ukraine-Russia war is over. It is coming to an end out there, and that's why we're seeing this rally inside of the euro. What's the next area of resistance? Well, it happens to be when Russia invaded Ukraine, and that's up again at the 112-ish area. And I would expect and anticipate, I don't know that that's where price is going to stop. I just am sharing with you that that would be the next resistance point. The real resistance level out here, because what you could get is an A to B equals CD pattern to the upside, and that would suggest that price is going to go up towards the 119 level. If it does that, you're going to see the dollar, the U.S. dollar index, get croaked. Now look, that's the monthly time frame chart that we're taking a look at. So there's going to be bumps along the way, but if we're looking for bumps, it's not coming from the weekly time frame chart. The weekly says 112.08 is where it wants to go to. The daily time frame chart has formed an A to B equals CD pattern to the upside. That's the euro that we're talking about, and it's already attained the 1-to-1 level, and we're trading. It's just blasted off of that C point. And when that happens, price typically will rally further, extend more than a 1-to-1. Well, where's the next area of resistance on the daily time frame for the euro? It's at 1.0936, followed by 1.095. That's where the euro is headed. That's going to put some weakness inside of the U.S. dollar. Now, that's only 57% of the U.S. dollar index. But that's a pretty significant portion, right? So now what we're going to do, Steve, just remember, we're going to switch. We're going to go back to, well, let me actually get that up first. Come on. There we go. Okay. So now I'm going to switch screens, change windows, and then we're going to take a look at the U.S. dollar out here. Share screens, go to this chart. I think it is the very last chart of mine. Give me a moment here. Here we go. Here's the U.S. dollar index. So if you're wondering where the U.S. dollar index is going, first, there's an A to B equals CD pattern to the downside. Like the euro's got an A to B equals CD pattern to the upside, the dollar has one to the downside. The first price projection level is 103.88. The second is 102.87. The third is 101.58. And the fourth is 100.16. Do I expect that this will stop at the 1-to-1 A to B equals CD? No way. Maybe it does. But that's certainly not the pattern that is present out here. If you look at the weekly time frame chart, you'll see that price is trading between trend line resistance, that's the yellow diagonal lines, and trend line support. Those are the green diagonal lines. You also see that if we take a look at the most recent retracement, high to low out there, we're below the 0.382, but not to the 0.618 level. Where are we headed to? I'd say we're headed to 103.55, 101.79. I'd say more likely we're headed for that rising trend line. That price gets down towards that 101.79 level. If you look at the monthly time frame chart, the monthly time frame chart had broken out above a prior resistance level. We were above it for 3 months, and now we're back below 105.27. So If your question is, what's going on with the U.S. dollar index? I say it's headed lower. And no, that doesn't mean that the war has come to an end. I'm just telling you what traders are saying, what traders are doing. Heck, all you have to really do is go take a look at the DAX. What's the DAX up today? 700 points? Let me see here. Give me a second here to see where the DAX is trading in Germany. The DAX, 754 points, 3 3/10% move for the day out there. So pretty big move in the UK. Just a small move, just 6 points to the upside. So that's what's going on when we take a look at the U.S. dollar index out there. I know it took a long time. I hope that helps you out, Spin. In fact, I probably screwed up because because of taking that long to do that, I may not get through all of the requests out there. But let's do our best here. Let's come back. Well, we're not going to get through them all. Not even close. But I'll do my best, and whatever I don't get through today, we will do tomorrow. First one we're going to look at is Berkshire Hathaway, BRK.B. Man, my thing, it's underscored.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. We'll look at the stock chart here for Berkshire Hathaway. I see a sell the D-point top that formed a couple of days ago. Price is trading below its green oscillator and change line. That tells us lost momentum. Berkshire Hathaway may be seeking out support, which would be the top of its profile at 484.72. 487.68 is also support. That's the weekly oscillator and change line. 482.92 is the monthly oscillator and change line. So that's what's going on with regard to Berkshire Hathaway. Let's go take a look at CrowdStrike. CRWD is the ticker symbol. This is for a dog inside the tiger's den. We've got a gap to the downside, so we've taken out a B point of an A to B equals CD pattern. Let's see what kind of volume we have. Geez, well, is my system allowing me to do that? Okay, so there's an A to B equals CD pattern to the downside. In order for that to come to fruition, though, you're going to need to see a close below 347.55. See, on the weekly time frame, price is traded back into this buy zone, which is between 347.55 and 359.56. If you see a close below 347.55, the A to B equals CD pattern to the downside will kick in on the daily time frame. I wish I could give you what that price projection is, but at least that helps you understand what's going on with regard to CrowdStrike. Let's go take a look at CLSK out here. CLSK, as for Peak G. Peak, I have price consolidating with inside its daily profile. I don't see a bottom pattern. I see a buy zone between 766 and 795. That's your support area. If price can close above its oscillator and change line, it's at 823 right now. You'll see a move to the 913 level out there. Weekly time frame chart just says be caution here with regard to CLSK. Let's take a look at the TLT. The TLT has got a wave number 7 top out there. That's letter G, and price pulling back down and testing the buy zone of its profile. And that's between 90.81 and 91.23. A close below 90.81. Then that ought to take you down. That'll confirm being short and take you down towards the 88.87 level. Folks, sorry I didn't get to Okta for White Shark or UUU for Chris B or TNGX for Rye, but I promise you I will do that tomorrow. Have a wonderful Wednesday. Thanks for joining us. Stay tuned for all the great programming. Oh, I won't be with you tomorrow. My apology. I will not be here Thursday, but I will be here on Friday. Take care, folks.